Imagine being able to build an app with
Good evening. This episode of the Intraday Price Action Recap is being brought to you by the Smart Money Manuscript. Hello, my name is Timothy Lee Rogers Sr., and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. Inside this powerful course designed to transform your financial future, I've meticulously condensed over 1,000 of my public YouTube videos into 40 highly efficient lessons that span just 2.5 hours. This course is strategically designed into 4 phases to help guide your learning in the most logical and effective way possible. Phase 1 lays the groundwork, covering essential financial literacy like budgeting, banking, and taxes. In phase 2, you'll move beyond the basics, learning about brokerage accounts, figuring out how much you need for your own individual retirement. You learn about how to do fundamental research on companies, and you'll also learn how to conduct technical analysis by looking at stock charts. Phase 3 empowers you to build a robust portfolio and leverage your capital using advanced techniques like options and futures, and it also teaches you the importance of backtesting your strategies. Finally, phase 4 takes a deep dive into the advanced ICT concepts, giving you a professional edge. Each lesson includes a short quiz to help solidify your understanding. By the end of this journey, you'll have the confidence and tool that you need to make intelligent investing decisions, manage your money without fear or ambiguity. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you for $69.99. Yes, $69.99 for all of this here. $69.99 for all of this? What a deal! Oh man, that's a steal. Let me run out and click that link right now. Good evening, everybody. If this is your first time tuning in to Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning in to Tim's Tidbits, I still want to say welcome. But I also want to give you a nice hearty, well, thank you for always tuning in to Tim's Tidbits. I'm a little out of focus. Let me get in focus. There you go. If you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Aranya Grande, as you be Big Spider, if you know hablo español. And you're now tuned to another episode of the Intraday Price Action Recap. Now, it's being brought to you by myself, the creator of the Smart Money Manuscript. The first link in the description below. $69.99 will get you one of the best investing, trading, stock market. I think it's the best course since sliced bread. It's the best thing since sliced bread. That's my opinion. It's 19 videos with 19 quizzes to test your knowledge on the videos. The quizzes are short, 5-question quizzes. Very to the point, concise, and then the cherry on the top is every second Saturday. Yes, including this second Saturday that's coming up on. I hear my son screaming back there on the game, and it's totally distracting me. If y'all can hear it, it is what it is. I got a teenager that plays games. Hey, I'm sorry, right? November the 8th at 12 p.m. is our monthly Q&A inside the Smart Money Manuscript. Yes! For $69.99, not only do you get a one-stop shop for all you need for trading and investing alike. Clear, concise, detailed explanations of my understanding of the complex ICT concepts, talking about fundamental analysis, retirement, portfolios, options, everything. And then you get a chance to have a Q&A with me personally every second Saturday. I can't stress it enough. That's all you need. Don't go spend $5,000 on courses. Don't go spend $10,000 on mentorships. Save that money and put a down payment on your new car. Put a down payment on your retirement home. Just save the money for something. Give it to your grandbabies. Something. Please, I'm begging you. I'm begging you. Not Michelle. What's the lady name? Monica. Deborah, what's the lady name from this morning? Who was I talking to this morning? What's her name? Monica. I think it was Monica.
That you were talking to last night?
This morning.
I won't own it this morning.
Oh my God.
But yesterday evening you were talking to Monica.
That was Monica I was talking to. That was yesterday. So that was yesterday when I was talking to her?
Yes.
It wasn't today?
No.
Man, y'all know I don't look outside most days. Y'all know my days be running together. You know what I'm talking about, Deborah.
I know.
Monica, are you on here? If Monica on here, Monica, you on here? Come on, Monica. Join us. No, it was this morning.
Well, I won't own this morning
Because she was
I'm
saying
not
she
a
was at
diamond
work.
member. Huh?
It wasn't for the it was public. It was like on fully realized public YouTube.
This morning.
Yes.
What happened this morning? What I missed?
I missed it.
What happened this morning?
Wasn't I talking to her this morning, Lump?
About what?
The lady when I was like, I wanna give you the smart money.
Oh yeah, that was the day. That was the day for free. Yeah, that was the day.
Yeah, that was this morning.
So you did a free stream this morning?
Fully realized public stream. We went crazy too.
What?
Oh, light skinned Deborah wasn't on there?
No. Needs to be.
And since you wasn't on there, I'm finna go delete the stream so you can't go back and watch
You better not.
Oh man.
What?
Missed her chance to make that little money this morning.
What?
Jeez.
Went crazy this morning. Who we got? Oh, I closed my trading view. We were at work. Look at Rhonda Thompson. We was at work.
Jesus.
Well, I mean, we were just talking about price. You know what I'm saying?
But
I was talking about
last night you said for the diamond members and the YouTube mentees.
I know.
You made sure to specify.
And this morning I sent out a back signal. I said, in celebration of my sweetie being back, I'm inviting everybody to the tape reading. And it wasn't just Discord, it was public. It was on the public YouTube channel.
Yeah, I can vouch for that. That's one of the notices that I did get.
Wow.
Matter of fact, look here, let me share my screen because Deborah, if
I'm taking it personal.
Sherman would have known. If Sherman was there.
Don't take it personal.
Look here, let me find my Discord here. I deleted it. I deleted the thing because it was in here. I only keep one link in here. I only keep one link inside the thing. And I just deleted it. I just deleted it when I just posted this.
Okay.
I just deleted it when I just posted this. And
you see right here, back and look at the replay.
Right here, somebody said question about the 20-day look back because we was talking about this stuff right here. And I'm assuming they posted this because we was talking about that this morning. And I just deleted the because I try to keep this clean. And I only like one thing to be in here so people ain't being like which link I supposed to click. So I keep this clean. I just deleted the what's the name out right there. Yeah, man, it was a pretty good. Oh, you know what? I can show you over here. Right here. You say here learn to share typing. I think the comments are blocked again. Oh, I forgot I got to put it on live. I don't know why now I see you right here. I guess my comments are blocked again today. I got to put it on live to see your comments. It thinks that you're a spam channel. That's what it thinks. It thinks that you're a spam channel because I can't, if I don't put it on live chat, I can't see your comments. Right. So now I got it on live chat now. Oh, this is what I'm doing. Cause Deborah think I be swelling. YouTube. All right, YouTube. Let me see here. Let me come over here. Cause I dox myself. I be done showed something crazy. Ain't nothing crazy. Yeah, ain't nothing crazy on there. Yeah, ain't nothing crazy on here. Make sure I don't be want to dox myself. Right here. See right here? See what I say? Tape reading session 11.5. You see what that says? Public. Right there. Public. You see that there?
Well, I shall go back and watch it.
All right. Tape reading session. Public. All right. And I click on that right there. Let's see here. Get out of here. I turned that on after I streamed because what's the name be coming up? Skip. See that? See that? See this public here. See, oh yeah, see that? Cause I'm talking about this cause somebody asked a question. That's it. Yeah, she was asking a question about that. Yeah, that was the day. Cause that's when I was going through like the calculator talking to her. And then it was down here. Yeah. Yeah, that's it right there. Monica, that's her name. I said Monique. It's Monica.
Y'all went for about 3 hours.
Yeah, we was on that 3 hours.
Jesus.
We
I
did,
missed all
Deborah.
that.
Sorry.
That was a
Wow.
good one too.
Monica, that's her name. I said Monique. I said all kind. Monica, her name. That's why I was going through here to see what her name was. Right. So Monica, that was her name was Monica. Yeah, we was on there for a long time. We went crazy. Wow. Y'all, when I start breaking out the little drawings and all that right there, we did like a whole back testing type of thing. We went crazy. And now I'm gonna make
it was a master class.
Now I'm gonna make this private so Deborah can't see it.
You look.
All right,
you make it private. Send me a link.
Hey, look here. We about to get. Oh, I forgot I closed my what's the name? Mess with Deborah. I supposed to open this already. Right. So, oh, I ain't say what's up to everybody. Who we got in here? Let me see who we got in here. We know we got Deborah in here, right? We know we got. That's why remember when I posted this in Discord. That's why I posted that right there. Did you see that in the Discord when I posted that with the little shishy mouth?
Yeah.
That's why I posted that, because this morning we was talking about if this fails, this supposed to push us down. We said this 15-minute bullish fair value gap supposed to push us up. So if this 15-minute, because this been bullish overnight, we was in a long-term, we was in an intraday sell program, bullish overnight buy program. This right here should push us up. If that stays, if this supports, then we'll be looking for it to go up to this upper quadrant of the 20-day look back. Right. And then and we was like, this Bissy right here is inversion fair value gap that should push us down. If it doesn't push us down, then we'll go up here to that. Right. And right here, it was, you know what I'm saying? I said, okay, it's holding, but this right here should push us up. So now we look to see if it's got a willingness to drop here or stay above. And once we got this closure above, right, then we said, now we're looking for this new week opening gap and that reclaimed fair value gap right there to act as support. And we closed there. We didn't even trade back down into it. We pushed up into that upper quadrant right there. And that's why when I sent this out today, right, I sent that out today because it was there. And I was just like, there's no algorithm. There's no algorithm right here. Where right there, I was like, right there, I put, shh, that's all, everyone, right? And up here, I ain't gonna open that one up because that one got money on it, right? But right here, I was like, shh, that's all, right? That's where it was right there. And that's why I posted that, because that was from this morning. I posted that at 2:35. Yes. Maybe if Rhonda nice, she'll look at it and take some real good notes and put the little what's the name is. But if I run, I wouldn't even do it for you. I'll let you go through and make your own notes. That's just me though. Ha! I kill me. All right, man. Oh, Deborah here, Marco here. We got Lump in here. We got Mike Pence Fly hanging out with Empire Trading. We got Jada in here. We got Erica in here. Let's see if Erica love to be inside the Discord called for no reason. Okay, she's not in there today. Erica will be over here in the Zoom, but she still be sitting inside the voice chat, listening to the voices in her head.
Leave me alone, Tim. I'm just trying to get what I can get when I can get it.
She be there listening to the voices in her head. Like, what you say, Tim? I hear an echo. Anyway, we got Hill Learning Shell over there inside the YouTube land. We got Kim over there in the YouTube land. Now, I put the times on there so I can see when y'all be cheating, right? Shout out Felicia. Felicia was the first one to comment at 6 o'clock. Hill Learning Shell cheating, come in at 5:30 when I first posted it. Kim cheating, coming in at 5:51. Felicia is the first one that commented at 6 o'clock. You are the number one top fan. I don't care what YouTube says, Felicia, because you the one that abided by the rules. Right? Shout out Rhonda Green. Right? Over there in YouTube land. Yes, Monica. Yes. Hey, man. This is not cheating. That's studious. Cheating. Rhonda says she's gonna look at it over the weekend. Rhonda, don't share no. Let me go full screen. Rhonda, don't share no notes. Don't put no timestamps in there. Let them go through that 3 hours on their own. Because if they would have been there live, they would have had to go through the 3 hours. So don't you go through them 3 hours and do the hard part for them and go give them the cliff notes. Let them go through the 3 hours on their own. Right? And guess what? It ain't nothing no different than what I done said every day. So you ain't got to feel bad by not doing it, because it ain't nothing no different than everything that I say every day. Right? It was just, walking through it to see it in real time. Just like Lump was like, man, I be having a hard time seeing them smiley faces, but I can see it real easy when you do it. And like what I always say, follow the money. Follow the money. When you follow the money, it's like you just have to do something in your mind to make it stand out, to make it click. Like me, follow the money makes sense to me. You know what I'm saying? Looking for the drastic moves, right? That same thing I had to do with breakers, with mitigation blocks, because I couldn't see the breakers and mitigation block. Because people be like, look at this high there, look at that candle, look at this high. Look, I got follow the money. So I just look for the overall arching theme, be like, there's the breaker right there. That's the breaker. Just like that. Make it make sense in your own mind. Anyway, y'all ain't came here to hear me run my yap. Y'all came here to hear me talk about the price action. Right? Shout out everybody who pulled up on the tape reading stream today. If you're not a Diamond member, if you're not even in the gang, I saw some people coming in the chats today that I don't even know the name, so I know they're not in the gang. You're officially in the gang because you're on the channel, but you're not inside the Discord. You're not a YouTube member, and I hope you got something out of the video. If you happen to be back right now, just hanging out in the shadows, right? Thank you for joining us this morning, and I hope you can see that the things we talked about, right, live while the candles were moving, right, it came to fruition. Right? It came to fruition. Now, if I did not have this blue line on this screen right here, right? You'll be like, why did price come up to that point there and then just turn around and come back to this point here? If I didn't have that blue line there, if I didn't have that green line or that purple box there, if I had that green rectangle or that purple rectangle, right? You would be like, why did price go up there to turn around and come back and just stop right there? Right? But when you understand what the algorithm is doing it based off of time and price, then these little vague areas in price like this right here will not escape you. They will not escape you. And like my brother asked me today, he was like, why did TradingView like make the algorithm? Why did they put these tools in there? Because these tools is all you need to do, but it's not the tool that you have. It's how you use the tool, right? These tools are just simple trading tools that everybody uses. Not everybody is a carpenter. So if you give just a layman a carpenter's belt with a hammer, right? You can give him a 3/4 pound hammer. You can give him like a box of 16 penny nails. You can give him some cut nails. You can give him a tape measure. You can give him, you know what I'm saying? You can give him all these tools, and then you put him out there on a construction site, and he ain't gonna know what to do. He got all the proper tools, but he ain't gonna know what to do. He's just gonna walk around and see what other people are doing. Oh, I see him just putting these nails in this board. Start putting the nails in the board. Now he might nail some boards in the right place, right? But if you leave him out there by himself, Charlie, ain't no telling what's gonna happen. Some of it he gonna get lucky sometimes, right? But when you understand, when you've been taught the skill of carpentry, and you have a correct blueprint that a architect has given you, right? Now, a carpenter is not an architect, but a carpenter can read those plans and he can build that house or whatever it is. That edifice will be beautiful, right? He will erect a structure and it'll be beautiful, right? And so when he's taught properly, when you understand what's going on with the price, and then you reach into your trading tool belt and pull out a fib tool, and you understand this is why I'm anchoring it to this low. This is why I'm anchoring it to this high. This is why I'm putting these quadrants on there. And now that these quadrants are there, I understand that something has a high probability to form at these specific price points. And when I see it happen, I can say, price did this, so now price should do that. And that's when you strike. That's where your entry model comes in, because price has done this at a very specific time and a very specific price, and you strike. Will you be correct all the time? No, it depends on your entry model, and you vetted it. You know that my entry model has a 70% strike rate. My entry model has an 80% strike rate. My entry model has a 50% strike rate. My entry model even has a 30% strike rate. No matter what the strike rate of your model is, you know how often to expect it to work and how often to expect it to fail. Me personally, I don't even keep track of my strike rate anymore. I used to in the past, but now I've gotten to a point where I don't use one model, right? I just trade at my own discretion based off what price is offering me. So I don't even keep up with my strike rate no more, because I've gotten to a point where I've advanced beyond just one model, right? But when you have just one model, that's the training wheels, you know, 70% of the time I'm going to be right. So I'm going to strike. whenever my model shows up. And if it goes against me, I know 70% of the time I'm going to be right. So I'm not going to strike again until my model shows up. And my model is only going to show up when my strategy gets to the point that says price has done this. Now it should do that. And I'll strike again. Now, looking at price. Again, welcome back if you was on the live stream this morning. And as you see, price went right there. Tim, how did you know price was going to go there? I didn't. But since price did this, came to our anticipatory reactionary point, traded back up, right? Consolidated, manipulated out the low, expanded up and traded back down, right? Then once we came up here, there, we said if price disrespects this, that's where it should go. Price did this. That's disrespecting this, right? We got our closure up there. Really, this right here was showing right there. That closure right there was pretty much the nail in the coffin because we closed above it. We disrespected it, right? Closed above it right there. Traded back down. Where do we trade back down? To some vague unknown spot. No. Traded back down to that upper quadrant. What is in line with that upper quadrant? A ICT bullish order block. Right? Where's that bullish order block? Resting on that quadrant right there. During this time, what is it doing? It's in support of the daily bullish narrative. Right? Traded back down to that bullish order block right there at that quadrant. Right? Remember when we was on the live stream, as price was trading in here, I said, this is how you fractalize the concepts. And then we ran the quadrants on the new week opening gap because we was looking at our daily dealing range. We was looking at the fair value gap. We was looking at the 20-day look back, all of that, right? Y'all follow me? People that was there this morning, y'all follow me, right? Correct. We was looking at the higher time frame quadrants, right? The look back, the daily fair value gap, all of that. Then I turned off the daily fair value gap quadrants, and I turned on the quadrants for the, I said, this is how you fractalize it. So now we're working within this little algorithmic area, right? And we went in there and looked at the quadrants on this to use it for intraday trading, right? And then when we came in here, we was on that 1 minute time frame, okay? All right, just a quick reminder for those that was in there, right? And here we go here, right? So when we was in there, we was looking here, we came over here, we said we had a BISI right here at the equilibrium or the consequent encroachment of the new week opening gap right there, along with a bullish order block. This BISI was crossing, coming and engaging with that quadrant line, right? And price traded back down into it, used it as support. So as we was drawing this out, I said, look here, there's a BISI right there in conjunction with that quadrant line. That BISI should take us at least here, even though that's a very short ways, it should take us at least here because this BISI here we traded down into, we had come back to the high. That was the low-hanging fruit, right? This is the low-hanging fruit. That's the reasonable objective for this move here, right? For this BISI here, that's the low-hanging fruit. And this right here is the reasonable objective for the overall move. Same thing, right? So when we hit this, we went back up, boop, there it is, right? Now it's there. Now you want to wait to see if we get that. Then what? We got that. Boom. Now we closed right there at the high of this. That's showing a sign of disrespect to that, right? Matter of fact, we close here. I believe I said something about we're disrespecting this. It's showing a lot of weakness. Doesn't mean that it has to fail, but it's showing a lot of weakness right now because we closed above consequent encroachment, right? We dilly-dally. What do I always say? Once we clear these quadrants, right, we looking for price to use them as support now. We cleared that quadrant, And what do? We come back down and use it as support. Where are we supporting price at? Let's go back here and look again. Oh my goodness, it's that BISI that's in line with that quadrant right there, right? Use that BISI as support, and then off we go up to the daily quadrant. I mean, the 20-day look back quadrant that we have pointed out when price was way back over here. Way back over here, when it was like, if this doesn't keep price down, then we're going there. We're looking for price to draw to that. Why? Because that's our next draw. That's out. Tim, there's no liquidity there. That because that's our draw, right? A draw can be a quadrant. A draw can be an imbalance. A draw can be a liquidity pool. What is the algorithm drawing toward? That's our next draw for this intraday move right here. And where do we go? That quadrant. And when we get to what does Michael always talk about? When we get to that upper quadrant, right? We can look for a deeper retracement, right? We can look for a deeper retracement, right? Let's look at something real quick. Let's test something real quick. Let's test it together. All right, so we're going to come here. I'm going to go to quadrants here. Go to a 15-minute time frame. To a 15-minute time frame. Go to our high, our daily high. I'm going to come down here to our low, right? So we came back up to a premium of the daily high, right? And we traded back down. We've set relative equal highs right there, right? So just inside that range of the daily, right? We came back up to a premium. And then when we look at this entire range of this drop right here, right? So we stop right there at equilibrium of that move right there. And as we can see, right, we consolidated there. So halfway point, right? And then we're at that point right now. So we can see that the algorithm is, we can understand that we are, right, working inside of this dealing range here, right? The algorithm is showing you that this is the dealing range that is working inside right there. Why is that? Right? Because we got heavy consolidation here, right? And then you see price came back to that area that we consolidated there, left it and came back to it again. So the algorithm is looking at this as an area of fair value. And then what else rests right there, right? This right here is a bullish new week opening gap, right? So this right here, the top of this right here is a weekly open, right? That's a weekly opening price right there. And that's from the 27th, right? That's from last week. So if we go up to like a weekly candle right there, come on, weekly candle, what just happened? If we go up to a weekly candle right there, right, as we see there, this right here is a weekly open, right? That's one of those 4 pillars, right? Open, high, low, close. All these are important levels, right? Come back down right there to that weekly open. So we're looking at that right there, right? And the algorithm is finding that right there at this point to be an area of fair value. How do you know that? Because when we look at what price is doing, right, we see that the algorithm is consolidating in this area, right? So it's looking at this area as an area of fair value. That's where it's engineering liquidity. See, it's engineered liquidity there. Go up, trade back down, right? Trace back into it, deliver down to that quadrant that we was talking about earlier. And we know the PD arrays that we was talking about over there also. I think I might have deleted them. I deleted them off already. I don't see them over here no more. Oh no, they there. Okay. That's it there. The reclaimed fair value gap and the inversion fair value gap on the hourly time frame. And we saw how the hourly time frame respected this very nicely. and just barely tapped into that at that quadrant, right? We talked about that this morning, right? And just to show people, right? See those hourly bodies right there inside that reclaimed, that inversion fair value gap, and then tapped into that right there, right? That's over there and over there. Tim, what made you pick those? Go back and look at the live stream, right? Go back and look at the live stream. All right. What else was what was I saying? Okay. So we can see that we're inside this range here, right? Expand it there, drop down, and we can see that the algorithm is working inside that dealing range right there, right? So right now we're in the middle of the road, right? Right now we're in the middle of the road of our dealing range that the algorithm is working inside. So right now, when you're in the middle of the road, you need more information, right? You need more information. You're not always going to have a clear cut what price going to do right now, right? And like we said earlier, intraday, we are in a sale program. Okay. On the intraday basis, we are in a sale program. On the higher time frames, daily and above, okay, we're in a buy program, and we've retraced back down to a discount PD array. And now we see here we've created a SIBI right there. All right. Now, when we look at that, right, first thing comes to your mind that, oh, that's a SIBI. We should automatically sell off of it, right? We can't really say that based off the daily time frame. Okay, that SIBI is in the premium of our move, right? It looks like we should be selling. It's in a premium, but we can't automatically say that. Why? Because we've come down to a discount PD array where we've left this balanced price range, and we've come down and we've repriced this BISI, right? Come down into a bullish breaker, come down into a bullish order block at a quadrant level right there at fair value, at equilibrium, right? So we can't just automatically say, okay, we're going to go up here and sell off. We still have to submit to the higher time frame is bullish, and until we negate this buy program, we can't just assume that we're just going to tank off of this SIBI right here, right? We always got to remember what the higher time frame has going on. Okay, intraday wise, right? Intraday wise, we want to understand how far can it go, right, before it invalidates this sale program, right? And that would be coming all the way back up here, right? Well, Tim, I'm going to miss all of that right there. So what? You miss it if you didn't participate, right? Because what did I say? When you're trading, right? This right here is a sale program. When you're trading bullishly inside a sale program, you're going to the base hits, right? There's relative equal highs here. If you get a buy set up in there, trade to there and get out, right? If you come back up here in this area, there's relative equal highs there. Trade to there and get out, right? Because you're going against the intraday grain. So you're just looking for the base hit. Excuse me. You're just looking for the base hits. And that way you can participate on your way up, because you know, okay, I have specific PD arrays that I can watch and say, if I get above this quadrant, we should use that to at least take me to that one. If I get above this one, we should use that to at least take me to that one. If we get above this one, we should use that to at least take me to that one, right? And while you're taking it to that one, you're taking your base hits. Boop, base hit, we get there, right? Same thing here. We came down to this 20-day look back quadrant, went into a buy program and said, if this PD array fails, this is where we're going, right? If you took long opportunities down here, you got into a beautiful area. Why? Because the best trades are going to come in the discount of the move, right? The best trade is going to come down here below equilibrium, right? So from this high to this low, right? If you got in this area there, you got a beautiful move, right? But as you see, we're using quadrants of different PD arrays, stair stepping our way up to this 20-day look back quadrant. All right. That's why I said we're going to fractalize the concepts. Okay. We came to a 20-day look back right here, came to that quadrant. We started moving up. Now we need something to use for support and resistance. Okay. We have a daily low right here. All right. We got a daily low right there. We have, right, if we're looking at this range right here, right, just looking at our range, it's like you pick what you want to use as your support and resistance, but long as it's based off algorithmic principles, right? So this dealing range right here, right? What is this right here? What is that? That's a leg that's manipulating price, right? It's manipulating price. Why do you say that? Because we're engineering liquidity there. We go up and set a high, and then we break down, right? So since we engineered liquidity here, then we break down, we're anticipating the algorithm to come back to this liquidity that it engineered. Where is it engineering this liquidity at? Right there at this quadrant level here. So once we reject this and we anticipate price going there, that's confluence of liquidity being engineered, right? This is a manipulation leg. What did that give us? A market maker buy model, right? Because we're engineering buy side and we trade away from it. Okay. So now if you see, okay, we're engineering a market maker buy model, right? Even though we're in a sell program, I can anticipate price to come back to this area. And since this area here, I'm not trying to force that high, right? In case the algorithm wants to leave that high in place, I'm just looking to go back to this 20-day look back quadrant level. Why? Because if I use this one as support and I get a buy signal, I can reasonably expect me to draw back toward that next quadrant up there. Okay. Now I'm expecting it to come here because of this bullishness, right? Especially if this fails, right? This is designed to push me down, right? That's my high probability fair value gap there, right? Why is that? Right? This is our first SIBI that we created dropping down, right? So when I come here, if this fails, now that's a high probability inversion fair value gap. So now it should support price to take me up. Because remember, I was like, there's a SIBI there that wasn't on my radar because we was looking at the lower time frame. Once we got to this portion of it, we had already identified other stuff, reasons for coming into here. So now that SIBI, once we get a closure above it, right, we're looking for it to be used as support, right? And so now we didn't come back to it right there. So it's supporting price to take us up into that right there. Now, if the algorithm wants that high, you would want to see this lend support to take us up into that high right there. Okay. Now, going back to our quadrants here, let me change this so it looks different because there's a lot going on the screen. It's a whole lot going on the screen. All right, make them stick out. And I'm going to hide the 20-day look back for now, right? This right here is, I say you can pick whatever range you want as long as it's an algorithmic range, right? That's dealing with what we got going on. So this is our dealing range here, right? We took liquidity there. We took liquidity here, right? We got a dealing range there. We map out that dealing range. When we come to our anticipatory reactionary point, which is our quadrant level and this reclaimed fair value gap and this inversion fair value gap, the bodies are respecting our inversion. The wicks are doing the damage, coming down into our reclaim and coming down into the quadrant level, right? And as we come back up, where do we get above? We get above this lower quadrant right there. What do we create there, right? As we're coming up, we create a BISI on that lower quadrant, right? As we was coming down, we created a SIBI on what turned out to be the lower quadrant. The algorithm knew that this was going to be the lower quadrant on the way down because it knows that. But now that we find it, give us our range and we take back off right there. Now we know we can anchor that low, anchor that high, and then we say, oh, we got a SIBI there that's just become an inversion fair value gap by a BISI that's on that quadrant. Now, this is an ICT fair value gap, right? This is an ICT inversion fair value gap. Why? Because it's in conjunction with that and it supports the idea of this quadrant supporting price. Okay, we dilly-dally around, we trade down into the quadrant there, right? Over here at 6 o'clock, we drop down below there, the 6 o'clock hourly candle, drop down below that low, taking out some liquidity on the lower time frame, and then we blast off, right? Once we blast off, we close above, well, before we even close above, we explore above equilibrium, right? The candle goes above there, we close right at equilibrium, open up, trade down, boom, into our discount PD array right there. Then we blast off and we close up here, right? Close to the upper quadrant of our range, right? But we're closing above the upper quadrant of our new week opening gap, right? This is the area where we said we fractalize in this right here. We close above that right there. So once we close above there, price opens up and drops down where? To the consequent encroachment of the new week opening gap. So from that quadrant down to that quadrant and then back up. Once we close right there at the high of the new week opening gap, what do? Trade back down to the upper quadrant. And then we blast off and we go above the upper quadrant of our range right there. So now we come up here, we set relative equal highs, right? And we're pulling back now. So now for a low resistance move, right? You don't want to see a deep retracement all the way back here, right? Why? Because we've already closed above this upper quadrant. Now, if we just come to this upper quadrant and just even at this candle right here, yeah, that's cool. We can get a retracement back down to here, and that will be totally expected. But once we come this high above this upper quadrant, for normal move would be back to this quadrant, a little manipulation like this right here, and then going back up, especially when we got our high probability inversion fair value gap resting right there. We want to see that support price to take us into that high. But you see, all of that right there is based off of this dealing range that we didn't even point out today. All of the ranges that we was using our 20-day look back. We was using the quadrants of the new week opening gap, right? Those the only levels we was watching. But based off of this algorithmic level right there, it's the same outcome. If you understand why you're getting that tool, why you're anchoring that tool, what does Tim mean when he says quadrant? Why ain't nobody answer Sam, man? Sam, I'm sorry. Ain't gang left you out there flapping, man. Why y'all gang? Hold on, man. Hold on. Why y'all just gonna leave the company out there flapping like that, man? Somebody talk to me. What's happening? Sam asked that question 2 minutes ago. Sam asked that question 2 minutes ago. Why y'all gonna leave Sam out there flapping, man? Huh? Oh, not everybody. The cat got everybody tongue now. The cat got everybody tongue now.
I'm sorry. I'll start moderating the YouTube chat.
Sam, Sam, We thought you had Monica. What's up, Monica? I was just talking about you earlier. What's going on, Monica? Monica, you ain't at work now? You ain't at work now, Monica? Oh, I can't put the link out there. We might get a crank yanker. We might get a crank yanker. Hey, I'm gonna try it. I'm gonna try it. If I get a crank yanker, I'm sorry, y'all. If I get a crank yanker, I'm sorry. Where's my link? Monica, I don't want to hear it. Earlier today, you was like, oh, Tim, I can't because I'm at work. And it's 6:50. Click on the link, Monica. Pull up in. Oh, wait a minute. Hold on. Wait a minute. I need to. Where y'all went? Oh, there y'all go. Click on the link, Monica. Hold on. I got it. I don't know. Monica says she ain't got no social media. So hold on. Let me set this right. Monica, stop putting all them hearts and happy faces on there and click that link. All right. Now let me see if this. Somebody test that for me. Click on a link. See if it pull up. Okay. I heard somebody. I heard somebody come in. Who was that? Seawalk? Who was that come in? I heard somebody come in. Happy.
That was Seawalk, Tim.
Yeah, happy just listening. I ain't actually if you were just listening. Where was I at? Quadrants. Sam, you still in here, Sam? Where's Sam at? Sam B. Song. You still in here, Sam? Monica ignoring me and my feelings hurt. Y'all know how I get when my feelings get hurt.
Push
Sam.
through
it. Sam, click on that link, Sam, and come inside the Zoom. Sam, if you're a crank yanker, I promise you, I do something to you. Click on that link I pinned in the chat and come in the Zoom.
What's a crank yanker? A master debater?
Yes, a crank yanker is a master debater. They can go tit for tat with the best of them. Sam, where you at, Sam? We waiting on you, Sam. Man, if two people break my heart today, I'm out of here. I'm out of here.
We're trying to get Sam to pull up and ask a question. What's going on?
Sam was asking me about something like that.
Oh, yeah. Oh,
Sam, there you go, Sam. Sam, talk to me. Can you hear me, Sam? I like verbal.
I got you. Can you hear me?
Yeah, I hear you. Sam, you sound nothing like I thought you was going to sound. You sound like somebody that's from like Jersey or New York or somewhere up.
Yeah, I'm from up north.
Yeah, you sound like you from up north. Okay, yeah. Sam, dig it. When I talk about quadrants, Quadrants are just any PD array that you're looking at, right? If you take a fib tool, right?
Share your screen.
Oh, there you go. Appreciate you, Marco, because y'all already know if y'all let me do all the talking, right? So, Sam, are you familiar with ICT concept, Sam?
Yeah.
Okay, all right. So you already know how to use a fib tool if you are familiar with the concepts.
Yep.
Okay, so when you get a fib tool, right? If you take it from the high to the low, right? If you take to the high to the low of anything, right? If it's a dealing range, the 50% is equilibrium. If it's if it's an imbalance, the 50% is consequent encroachment. If it's a block, the 50% is mean threshold. Okay. Anything that you run a fib on, right? It's got an equilibrium, a consequent encroachment, or a mean threshold. You can break it up into quadrants. And what that is, right? Inside your fib tool, right? You know, inside the fib tool, you can go in and set different levels. All right. And so for quadrants, what you do, you go in and you set your fib tool, right? Let me do this right here, and then I'm gonna make it thick so you can see it. All right. Let me hide everything else. I still see something. Okay. All right. So now what I've done, right, inside the fib tool, the 0 and the 1, that's your top and bottom, right? You highlight the 25%, the 50%, which is consequent encroachment or equilibrium or mean threshold, and then the 75%, right? Those are your quadrants, right? And so these quadrants, okay, the 25%, the 50%, and 70%, right? In between the 75% and the 25%, this is where you're looking for the bulk of your trading opportunities inside any dealing range, right? And then if you're looking at, if you've broken down a PD array as your dealing range, it's the same thing. You're looking, and if you notice here, when this dealing range here, you notice here, it got above this lower quadrant, used it as support, pushed us to the next quadrant, right? Got to this quadrant, Wick did the damage, used it as support, pushed us to the next quadrant, right? The algorithm will use these quadrants as stair steps to work out your market maker buy and your market maker sell models, right? This tool here, that, like my brother was saying, this your gold mine when it comes to the ICT concepts, because this is how Michael is able to say, I can tell you where my PD arrays are going to form. This is how he does it, by using algorithmic algorithmic things, dealing ranges, PD arrays, all of that, and running and breaking it down into quadrants. And he can tell you exactly where the PD arrays are going to form, because now he knows at whatever, like when you go in here, even if you know what I'm saying, you can't identify the PD arrays well, right? You can come in here and you can put on your prices. If you're a person that need to see like the levels and the prices, right? You can say, okay, when the algorithm gets to, I can look for some type of support in a bullish scenario. I'm anticipating this to be manipulation to the bottom, right? I'm anticipating this to be a market maker buy model, because price is bullish. We engineer buy side liquidity and we trade away. Right now that we've traded away, I'm looking for this range to offer me some kind of trading opportunity in the future. Okay, so now since this is my range, I know the lower quadrant is 25,435. I'm looking for the algorithm to make some kind of trading opportunity around 25,435. Okay, I'm looking for the algorithm to make some kind of trading opportunity around 25,587 and 3/4. I'm looking for the algorithm to make some kind of trading opportunity around 25,740 and 3/4, all the way up until you get to the opposite end of the market maker buy model or the market maker sell model. works the same way, right? And then that's that. But the quadrants is just breaking down your dealing range, your fair value gap, your order block, whatever it is, breaking it down into 4 different sections, right? You have 1, 2, 3, 4 different sections. That's why he called it quadrants. Quad is for 4, right? You got 4 different
Yeah.
quadrants.
Now, are you using the what is it, 62 and 79 on the fibs too, or are you just using the quadrants to find your like sweet spot?
Okay, the 6279,
Like what is it, OTE? What
that's a
they call
different, yeah.
OTE?
The OTE is a different like when you're using the OTE, right? It's a very specific reason why you anchor looking for OTE, right? Do you understand when you anchor to look for OTE? Like, do you know the specific reason why you should be looking for OTE?
Uh,
I'll
because
take it
the,
as a no. I'll take it as a
yeah,
no. Okay, right. So when you're looking for OTE, right? Um, it's going to be on a time frame, right? Let's go look at a 5-minute time frame, right? And you're looking at a market maker model, right? So we're looking at a market maker. This is a market maker buy model, right? We're anticipating. Let's come here, right? We're going to cut this off here, right there. All right. So, right, we're in a market maker buy model here, right? And we see here that we got our dealing range. Okay. We're looking at this right here. Our niche consolidation. We drop down, look for manipulation. We run our quadrants there. Now we anticipating something to set up here, something to set up there, something to set up there. That's based off of our dealing range. Okay. Now, whenever you run your fibs for OTE, you want to do it based off of an area of accumulation or distribution. That's when you run your fib for OTE. And what do I mean by that? Right? We come over here. This is a market maker model. We say this right here is our smart money reversal, right? And now we're going into an area of accumulation. This is our first stage of accumulation, right? Whenever we leave this area of accumulation, be it if we leave with the price engine model of offset distribution, like we're doing here. Offset distribution is when we manipulate out sell side and then rally. Redistribution is when we just rally and then retrace, right? No matter how we do it, we go from we want to look at, right, the low. Let's put this on OTE, right? We want to set it for OTE. Then we take our low. We go from body to body for OTE, right? We come from our lowest body, right? And we go up here to our highest body right here like that. Okay. And then also we can look for it in from the lowest body to the highest body there for the overall range there. Or if you say, okay, I want to look for it after I've got my verification, right? So this is the lowest body. You say, okay, this right here that's my manipulation, right? And then we're coming out there. So you can say, okay, I'm going from here because we've manipulated. We got trap traders there, right? And now we're leaving the area. All right. So going from, right, if we're going from here, right, when we're leaving the area right there, or if we're going from there, like this right here, it just, it depends on like the time frame you're watching, how price is moving, but you want to anchor it dealing with your area of accumulation, right? Your area of accumulation here. So here we are, right? When we're leaving the area, this right here actually would be when we're actually leaving our area right there, right? But let's go to the low and see, but you're running it based off that right there, right? And then when we come in here, right, you see this here, this right there coming from all the way down inside the manipulation, we don't get all the way down inside of an OTE, right? But when we come back here, when we exclude the manipulation and we come in from when we actually leave the area, right? Like I said, you're looking for when you leave the area, we're coming back down into a deep OTE right there. But with OTE, you're anchoring it based off of when you're leaving an area of accumulation or distribution, right? That's why you're anchoring it for OTE, right? And then, and you also want to keep in mind all the other concepts. That's why I say if you don't want to include your manipulation down here, because we're anticipating these areas to be like trap traders, right? We're you including everything, balanced price range, trap traders. That's why I was saying you're coming from the area where you're actually leaving the area, but you're anchoring it based off of, we got this area of accumulation and now we're leaving. That's why you're anchoring it for OTE. You're not just anchoring it for OTE just because you say, oh, I'm going to pick a high and low, right? I just like this high and low right here, and I'm going to anchor it there. Yes, it works out this time right here just because you picked that, but you want to understand, why am I picking it? I'm picking it because the algorithm is in a market maker buy model, right? This is an area of accumulation. When we're leaving this area of accumulation, now I'm anticipating a retracement to come back inside this sweet spot right here from 62 to 79% to give me a entry, because we've left this area of accumulation. That's why you're running that OTE fib right there, right? You're not just picking it because, oh, I like, let me see. All right. We came down here and we made a low there, and we came up here and we made a high there, and I'm looking for an OTE here, right? Now, this not an area of accumulation. This is your smart money reversal. You see what I'm saying? Sometimes it'll come back down and give you a OTE here during high resistance. It'll come all the way down here into the OTE at the smart money reversal. But you're not anchoring it here for looking for OTE, because you anchor looking for OTE off of an area when you leave an area of accumulation or distribution in the sense of going down. Right? You understand what I'm saying?
Yeah, that makes a little sense. I got to review what you're saying, but it makes sense.
Yeah. Yeah. So yeah, just look back at that and then start to back test that, where you want to run your fib based off of an area of accumulation inside of a market maker buy and an area of distribution and a market maker sell model, right?
So you don't place the fibs on, let's say, a range, right? Like on a high time frame. You don't place the fibs on like the high and then the low where an explosive move happened. You don't do that.
Nah, like if you talk about like if I come here on our overall range here and
Like,
go
yeah,
there and go
yeah, you don't do
there,
that.
and nah, if I'm looking at if I'm this right here, this is our 20-day look back. That's what I'm looking at right here. Like
Yeah,
if I come over here, right, I got it inside this folder here somewhere, right, and right here this is my 20-day look back, right, and you see it's the same spot. When you see how it's changing right there, that's the same
yeah.
area. That's my 20-day look back. And so the reason why I use that is because it's not based off of, I'm looking for a 62% retracement inside of this range right here, right? That's not why I'm doing that. Now, using this daily range, okay, and I'm gonna give it to you on the higher time frame now. So now, this higher time frame, this is an area of accumulation, right? We're leaving this area of accumulation. Now, you can take your fib, right? Go from body to body on this right here and put it into OTE like that right there. I ran the fib the wrong way, right? Body to body, put it into OTE. Okay. Fat this up. Extend it to the right. Okay. Now, right. This is our OTE area. Sorry. This is our OTE area right here. Right.
So can I ask a question real quick?
Yeah.
So like what makes you see that where you anchored it on the
Mm-hmm.
green candle on the south side?
Over here.
Like what makes you pick that versus any other one?
This is when we're leaving. That's the same thing I was saying before. This is the manipulation leg here, right?
Mm-hmm.
And we're looking at this as trap traders, and this is when we're leaving the accumulation area. So you're
Okay.
going from when you're leaving, right? This is the lowest body. Like if you're doing lows, if you're anchoring it at lows and looking at the dealing range, right?
Mm-hmm.
You can anchor it from the low to the high, right?
Mm-hmm.
And looking at the dealing range. But what Michael taught with OTE, you're looking from body to body for OTE. You see what I'm saying? So
Mm-hmm.
now, right now, we're in the OTE range right here. Right, we're in the OTE. So if you're looking for OTE, this is on a higher time frame. You're anchoring it based off of leaving an area of accumulation or distribution in the sense of going down, right? That's why you're anchoring it for OTE. If you're anchoring it based off of just this range here, you're anchoring that because you're looking at that as a dealing range. And now for this specific time here, right? If you're just anchoring it from here to here, what you want to do is you want to go in and make sure that, so counting today's trading right here. So I'll start on this candle here, right? You want to go like 20 days back, right? And you're looking 20 days back here. And so now you're looking at the highest high and the lowest low, right? Uh-oh. Uh-oh. Come here. You're looking at the highest high and the lowest low within that 20 days, right? Right. So this is your if the look back range, right? So 20 days back, this is the highest high and the lowest low. And this is when IPTA is going to be, it's going to be looking for liquidity and imbalances in the short term, meaning from now 20 days out inside this dealing range right here. That's your highest high and your lowest low. And that's why I have the 20-day look back like that, right? And so now the algorithm is going to be looking inside this range for liquidity and imbalances. And these are the quadrants that you're looking for trading opportunities to form around. And you see this morning, when we came in overnight, we dropped down to that equilibrium. And then when we got the bullish reaction off of that, because we come into a daily breaker, daily order block, at a 20-day look back equilibrium, and now we're looking to see if we get bullish signatures. And now since we're talking to you, we see that we came into a OTE. So this is an area you're looking for bullish signals also off of OTE. No PD arrays needed. Just based off of leaving this area of accumulation, you're looking for a retracement back into this OT area and look for reasons to buy. You see what I'm saying? So if you simplified it down to OTE, right, you came into an area of OTE. But looking at the 20-day look back just based off the range, now inside the range, is there a PD array that the algorithm left here at this equilibrium to support price? It is. There's a bullish order block right there that makes that an ICT bullish order block because it's at a specific spot that the algorithm designed it to support price at this time, right? You got a breaker there at that range right there, right? We got this fair value gap right here at that range right there that's intersecting with that line. So all this stuff is based off of why am I anchoring this tool? Why am I'm not just putting it there and say, I want to see an OTE. I want to see an OTE here now because we just left an area of accumulation, right? This is my price leg that left there. I'm going to the lowest body, going to the highest body inside that price leg that left this area. And now I'm looking for OTE to form OTE entry in that area right there. and it's in a bullish scenario. Now you can't just go and look for a bullish OTE in a bearish scenario and say, oh, why is it failing? You want to make sure, yes, you're in a buy program, right? I'm getting a bullish displacement in a buy program, and now I'm coming out of an area of accumulation, and now I'm looking for that buy signal right there at that OTE. Make sense?
Yeah, I got you. That makes sense. I appreciate it.
Yeah. What else you got? I love talking about this stuff, so come with it. Come with it. What else you
Yeah,
got?
I'm just like, because I used OTEs. I used the OTE on the fibs with just the range, and then like learning about this now, I'm like, okay, this is something to add to the toolbox and just test out or whatever.
Yeah. So if you
I gotta
just
get
looking
more
at your
comfortable with that.
ranges, if you're looking at your ranges, right, move away from looking at OTE for your range, and then just put quads on your range. Now, mind you, you want your range to be an actual dealing range, and like an actual dealing range is where you swept liquidity on both sides, right? You've taken out sell side, you've taken out buy side, and now that's an actual dealing range. So you can run your fibs on there and put it into quadrants, right? And then now that you run your fibs and put it into quadrants, as price is moving in the future, you're looking for PD arrays that have been left on these quadrants to trade off of, and you're looking for the bulk of the trading in between that upper quadrant and that lower quadrant, right? That's where you're looking for the bulk of your trading opportunities inside that area right there, because it's giving you a fixed range to be at, like, if price is bullish, right, it's giving you a fixed range. Like if you're taking a short, right, and it give you a short setup, you can realistically expect it to draw back down toward this right here. So if you got some low hanging fruit inside there, you can take a short. You're not trying to force it too low, because you know the box that you need to stay within, right? If you're down here, right, and you take a bullish setup, right, if it comes here and start showing you that it wants to pull back, say, oh, we just ran to that quadrant, it may take a deeper retracement. I don't want to sit through that drawdown. I'm gonna take some profits here, and when it come back down, I'm gonna take another entry, you know what I'm saying, and take it back up to that quadrant, because if it hit that, it may come back down to this quadrant, and I don't want to sit through that drawdown. I'm gonna take my profit. When it comes back down, I'm going to re-enter, and then I'm going to take it back up, because now that is used that as resistance, now I know it's going to break and use it as support. This is true support and resistance based off of the algorithmic dealing range. And then still use your OTE, but only use your OTE running on areas that's leaving an area of accumulation or distribution, right?
I got you. I appreciate it. I'm gonna definitely top in more with this, but I appreciate it.
Yeah. Yeah. Go back and back test that in price, run them fibs on old price, and you know what I'm saying? Like, like, like condition your eyes to seeing it. You know what I'm saying? And when you're going back and when you go back through, don't just go back and see it, right? Don't just go back and see it. Go back through when you run, you know what I'm saying? When you run it, just pick random ranges, right? Just pick, God, dog, oh, I got it locked, right? Oh, I don't want to move that one there. That's why I was locked. I'm glad it didn't.
So can I give you a ticker to look at?
Yeah.
It's ORCL.
You said ORCL?
Yeah. And then if you go to the monthly,
Oracle. Okay.
I just
All
want to
right.
show, like, yeah, Oracle, yeah.
Okay.
And so like you see that on the sell side, that green doji looking candle with the long wick
Over here.
right there, yeah. So
Mm-hmm.
that's where I would anchor like my fib and then run it all the way to the top, to the highest high.
Yeah, that's cool right there. Because this right here, this is when we're leaving this area of accumulation right there.
Mhm.
All right. So if we're coming here, go from there and then go to here like that for OTE, right? That's how you look for the OTE, because this right here, this is when we're leaving this area of accumulation right there. And then if you're looking at the entire range, right? If we're looking at the entire range, we'll go from the low to the high, right? We'll go from the low to the high. Okay. And then this right here is the quadrants of that range right there. So now when we're looking, as we look here, we can see based off this right here, right? When we look at our OTE range right here, right? Our OT range is in line with our lower quadrant right there. Okay. And then that lower quadrant has a BISI right here that's crossing that lower quadrant right there. Right. So if price comes back down into this OTE area, right, we got this BISI right here that's designed to support price. Right. So I'll be looking for it to trade back down into this now. Right. What you also got to keep in mind is, right, we have a bullish order block here that's in line with this equilibrium. So this could provide some bit of support before continuing down all the way into a discount, because this is from here down is the discount of the move, right? But you got a roadblock here that could potentially lend some support, right? Because these are monthly candles, right? You're coming down into a monthly PD array. This monthly candle here that could lend some support, right? Which could very well take us back to that quadrant before coming down into the OTE, right? But this, since it's a higher time frame, you would just have to wait to see how it play out. But if you see, right, and so when you're looking at this right here on my higher time frames, I like to look at body to body, right? Because this is the bulk of the move, right? So I like to look at body to body on my higher time frames. And let's change the color of this. I'll make it blue, right? I'll make it blue and I'll make it dotted, right? So that right there is mean threshold of that bullish order block, right? So this bullish order block, that's mean threshold. If you get a monthly closure below that mean threshold, it's showing weakness of that order block, right? And so that lets you know that, okay, it's showing weakness of this. So price is showing that, yes, I may want to continue down, right? Getting a closure below mean threshold of that bullish order block, showing weakness of that. Even if we get like a rally back up, right, then you'll anticipate, okay, how far can it go back up, right? Come down to that quadrant, maybe bounce back to that quadrant, and then get a deeper one. But in a low resistance run, right, how we got this huge rejection off of there right there, then we went back up and we respect the because we can run quadrants on wicks too, right? I do it like this to make it easier on myself.
Looks like the CEO of the WIC was respected.
Yeah. So we come there, right? We went up, failed to get to the upper quadrant, went above CE, then dropped back down. So we got a healthy respect of this right here. So we got a rejection, and then we got a respect of this right there, right? That's bearish, right? So now you want to see that bearishness just continue. You don't want to see it bouncing back up again. So that's like a low resistance move. We already respected our PD array, and we want to see it to continue down, right? And then once we challenge that sell side right there, now we're getting into the area where we want to see price start to get supported down here in this OTE, down here at this lower quadrant, right? We want to see price supporting, and now we have a PD array there at that quadrant. So when we come back down here, right, we want to see it support price and go back up, right? And then that's just, you know what I'm saying? Like I say, for OTE body to body, right? And you see that OTE is falling in line with that lower quadrant for the overall range. Let me see what it looked
I
like on the
appreciate
lower
it.
time frame. So looking at the daily charts on there. All right. Okay. We've come back down. We're repricing this liquidity void here, offering sell side delivery to this liquidity void right there, right? And since this is a liquidity void, right, you got to offer sell side and buy side, right, just to offer price, right? Because there's no prices been offered in here yet, right? So you're offering sell side delivery as we're coming down, and then you will need to offer buy side delivery as you're going up, right? How it chooses to offer that, right? It's like I say, it can be a come here, come here, come, you see what I'm saying? But it's going to offer it in there, right? And so right now on the daily time frame, right, we got this area here, right? That's a, this is the range here. That's a balanced price range. And when we come back here, we're coming back to equilibrium, right? So as for the bullishness, right, this is the area where you would want to see price come here and then rally back up. But for a nice discount, right, you would want to see price come down into the discount, right, in between this area here, this equilibrium and this lower quadrant, right? Because when we say we looking for your opportunity to trade in this area here between that 75, where's the 75% on here? Right here, between that upper quadrant and that lower quadrant. This is where we're looking for our best trading opportunities. And we're running this fib for our trading opportunities in the future, right? So for healthy price action, you want to see it come down, offer support here inside this OTE range, right? And then make our way back to that quadrant. Even if we pull back again, then get above that quadrant and pull back, then get above that quadrant, pull back, like that right there on the daily time frame, and so on and so on. And then we also have a liquidity void down here, right there near that lower quadrant, right there inside that OTE, right? So we're offering sell side to this liquidity void, right? And then you want to see it eventually make its way down, offer sell side delivery to that liquidity void, find support on the lower quadrant, find support at OTE, and then start to use them quadrants to climb back out.
Got you.
Yep. And everything, like I say, for everybody that's listening, there's no 100% in price. All you do is you look at the algorithmic ranges, right? Just like how we said this right here was a premium wick right there. All right. So let's go back to that monthly chart real quick, right? Go back to that monthly chart there. And when we get on that monthly chart, okay, I'm going to put a vertical line right here, right? The reason why I'm putting that vertical line there is because that's when that wick existed. Everything to the left of that vertical dotted line, the wick that didn't exist yet. Everything to the right of that dotted line, that wick was in place. All right. So now we go down to a daily time frame, right? And we find that, oh, let me go, it's not showing here. We go down to the daily time frame and we find that line. All right, so go to the daily, right? There's that line. Okay, so now when we get that line there, all right, remember we came in here, we created the top of the wick, we rejected back down, and then we closed right here. This is when we closed. That's when we created that wick right there, right? So right there, that's the close there, because this is when the next candle opened up, right? So we have this long wick right there on the monthly time frame, okay? And then we opened that month over here somewhere, I don't know, over here maybe, I don't know, but we just looking at daily candles, right? This is when we close. So when we closed here, right, from this point here up to this point up here, now that long wick exists, okay? So we run the quads on this long wick, right? Since we went up there and rejected, right? And this is a premium PD array. What do we expect price to do on premium PD arrays? Trading up, right? and then using them as resistance and coming back down. So what are we doing with these quadrants, right? We're looking for price to respect 50% and lower. We don't want to see, ideally, we want to see it hit 25 and get out of there, right? But we want to see it respect 50% and lower, right? So what do? We open up, we manipulate out some sell side, we rally up, take out some buy side, then we immediately drop back down. Gang. What signature is that? I'm listening.
The wig snatcher.
The wig snatcher, right? What's the wig snatcher? We go in a direction that we anticipate price going. It's very common. You see it all the time. You go in a direction where you see price going, where you anticipate price to go based off the narrative, right? What does that do? That trips short sellers into the market, in this case, because we're bearish, right? It immediately reverses and takes them out, right? So you engineer some liquidity here, right, to take us back up, and then you take them out, right? You punish them for being right? So now you engineer liquidity here by tripping in long sellers. They, haha, you was wrong. It's going up, right? It go up, right? And then you come to a anticipatory reactionary point, and then you turn around and rip their face off. Now, the people who got short last time, now they're scared because they got their face ripped off. The people that got long, now they scared because they got their face ripped off. You retrace back into a ICT PD array. Where is it? That fair value gap is in line with that quadrant right there. And then price goes down, right? That's your wig snatcher, right? So when we came here, and then it happens over and over. It doesn't fail, right? We come here, we rally up right there. What do? We set an order block on that quadrant right there. Use that order block as support to go up to the next quadrant, right? We come here to that quadrant, we wick up, right? We wick up, we come up, we're inside this order block right here. Where is this order block? This order block is resting on that quadrant. We go up inside that order block, we come down, respecting mean threshold of that order block. We drop back down, right? Create a breakaway gap. That breakaway gap is on that quadrant, right? We never trade back up into the breakaway gap. Why not? Because we have another fair value gap there resting on that quadrant after we get the wig snatcher, right? When we leave this area right here, right? This is the candle that's taking us out of that area. We don't want to see price digging into this balanced price range right here. Why? Because we offered sell side and buy side delivery, and then we left that area right there, right? We're anticipating this to stay open. Why? Because it's a breakaway gap. We got a fair value gap with another fair value gap immediately following it. We don't want to see the breakaway gap touch. We come back up into the fair value gap, resting on that quadrant, price drops down, right? All of that's happening off of that wick, right? And you ran the quadrants on that wick. And here it is, it's playing, it happens over and over and over. If you understand why I'm anchoring this fib tool, then I know why I should be looking for things to happen at these areas, right? And then in this case here, if you just ran it from there to there, yeah, a OT looked like an OTE would have worked out in this case. You know what I'm saying? But OTE,
What's an OTE?
optimum trade entry, right? Running it for OTE, running it for OTE here is not why you anchor for OTE, right? Even though it works out, right? It works out in this case, but this is not why you run it for OTE, right? You don't run it for OTE just because this is a range, right? You run the OTE based off of, I'm leaving an area of accumulation or distribution, and I'm looking for this optimum trade entry retracement to this area right here based off of what the algorithm did. The algorithm is in a market maker buy model. This is an area of accumulation. It's expanding away from this accumulation. I'm anticipating this retracement back to this optimum trade entry. That's why I'm looking for OTE. In this case here, you wouldn't be looking for OTE, even though it worked out. You're just looking for it to respect consequent encroachment of this wick. And while it's going up there, it's leaving footprints to let you know, okay, you can trade off of this, you can trade off of this, but you're using it to come up to this point. You're not trying to force it to that high. You're not trying to force it to that high, because why? You're literally just going back to that quadrant right there, because you're anticipating it to ping pong in between the quadrants. And once you get to an area where it should act as resistance, now you want to see it ping pong and use them quadrants to go the other way. Oh,
So just looking at that green candle, the one with the long wick, where it switched directions, yeah.
Mm-hmm.
Would we've been able to tell that it was gonna drop if it was a wick snatcher? Now the wick snatcher, that green candle, didn't need to well, it's a two-part question. So one is, would have we known that it was gonna drop? And then the second question is, did that green candle have to take liquidity from the buy side?
This doesn't have, this candle right here is taking liquidity there, but
Okay,
it doesn't have to come here and take liquidity there, right? Because because what's happened, right? You're taking sell side, and then you're coming and you're taking them out there. So the liquidity for them was taken here, right? And now for anybody that got long here, right, at this point, their liquidity is down here. So there's no need for this to take more liquidity. The only reason why you want to see this take liquidity is to give you because what do we say? When we're looking for a reason to sell, we want to see a manipulation of buy side. Now that we're at our anticipatory reaction, we come to our anticipatory reactionary point here when we come up there, right? And we start consolidating here for a couple of days. Now we get the manipulation of buy side, and then we're dropping. You see what I'm saying? This manipulation of buy side is starting something totally separate from the wig snatcher setup, because we don't identify the wig snatcher until here. And once we identify the wig snatcher, now we're looking for an entry after that has happened.
Okay, I got it. Okay, because I was saying, damn, if I could anticipate that green candle being the wig snatcher, that would have been a beautiful put option.
And the way you do that,
out.
And the way you do that is, you see we got this rejection here, right? So you're anticipating this to act as resistance, right? When you see this manipulation here, right? You see this manipulation there, and then we quickly rally up here. You're anticipating this to hold price there. So when you get to this area, right? When you get to this area here and you start to see price failing and respecting this right there, now during this time, if you've already, because you're looking for reasons to get short, right? You look for reasons to get short, and looking at this right here, what's above this right here to get short on outside of this order block? Nothing. This is your premium PD array right there. So this is where you're looking to get short, based off the idea that you think price is going down, based off the fact that we create this large rejection, and I'm looking for this wick, right? This monthly wick that we etched out. I'm looking for it to respect consequent encroachment. And what's the only PD array on the daily time frame that I can sell off of? This daily order block right here. It's a 2 candle order block, but this is the last up close candle there. So this is the only place I can sell off of. So if I'm trusting, right, that this is going to be bearish, when I see price trade up into this order block there, now I can short on this order block, and my stop is going to be above that. If we break above that swing high, right, I'm offside, get me out of the trade. You see what I'm saying? Because I'm already anticipating this short here based off. And then now once you get in there, right, and you come back down there, you get confirmation of the wig snatcher. Now you can say, do I want to take my profits, or do I want to let it ride? Because I see I got a wig snatcher, and now I'm anticipating it to respect this quadrant right here, right? Because we've left this quadrant and came down into this quadrant. Now we've left that quadrant with a wig snatcher. Now I'm anticipating it to respect this quadrant right here. Right. So now you can say, am I taking my profits, or am I going to let it ride? Right.
All right, perfect. No, that's beautiful. That's beautiful. And thank you, Sam, for getting them started. I mean, he always gets started, but he starts cooking. We're cooking.
Hey, Lump, Marco fun to go crazy, Lump.
What up?
Hey, it's 7:40. It's 7:40. Um, I think that's enough, man. I seen Joe come in. Joe, did you have something? I saw Joe come in. I ain't wanna.
Yeah, I'm here, man. I didn't want to backtrack with any questions, Tim. I'm still catching up, man, from
You
mid
fine?
September.
Backtrack if you want to. You fine? I ain't got nothing going on right now.
But from where I came in with you doing the fib and the retracement, those are some of the exact questions I've been having. I know that we talked about a couple of the sessions that I was on. You use that fib when you're leaving that balanced price range. But what I will do, I'll go back, 'cause since I know you talked about it tonight, I just got on while you were talking about it. I'll go back and check it out, and then and go from there. If I have any questions tomorrow, I'll bring them up.
Okay. All right.
Appreciate it.
Yeah, ain't nothing. Hey, man, I feel like this was a good one, man. I appreciate Sam for pulling up with the hard-hitting questions. You know what I'm saying? I appreciate y'all for y'all patience and sticking around with me. You could have been anywhere else in the world, but you chose to be here with me. You hear me? Hey, that's all I got. If this was your first time tuning in to Tim's Tidbits, you probably ain't here no more because we've been on here for a long time. If you still here, I appreciate you. Hit the like button. Share this with somebody who you think gets something out of it. Let's stop people from spending $15,000, $10,000 on mentorships. It don't cost that much to learn this. Michael taught it to us for free. Right? Yeah, I got a course for $69.99, but you ain't got to buy that course if you don't want to. You can pull up on the live. You see, I love talking about this stuff because the more I talk about it, the more it gets ingrained into my mind. So it's helping me. It's a win-win. You hear me? Right? Pull up anytime you want to. And if I'm live, hop on, ask questions. I run my mouth, man. Until the next time I decide to get on Al Gore's internet and share my thoughts on this thing that we call price action. It's your boy Timothy Lee Rogers Sr., aka Aranya Grande. That just means big spot if you don't hablo español. Y'all be safe out here in them trade streets, man. Gone.